Hello and welcome to the Power of Passive Investing. We have a very interesting guest today. His name is Dustin Miles. Dustin comes from a multifamily world, but he has not been in multifamily all his life. Dustin, welcome to our webinar series. We're excited to have you, and we would love for you to share with our audience where you come from and a little bit about yourself, please.
Yeah, absolutely. Yeah, thank you for having me on. Was it, great to see you again and excited to be on here. So I live in Fort Worth, Texas. I'm from here. I have moved around some. Went to UT Austin for engineering school and moved around a little bit after school and then ended up coming back here. I worked as an engineer and worked in the defense sector for a number of years. And really, really good folks. Great job and all that. But just at the end of the day, I think I have being an entrepreneur in my blood a little bit. Kind of stepping back a little bit. I had a candy business as a 8-year-old kid in elementary school, and a bus driver called me the Candy Man, so it was kind of fun. And then in college, the entrepreneurial bug kind of hit again. So I had, this is dating me a little bit, but I had an e-commerce business back when Yahoo.com had auctions. They had an
Wow.
auction website, so kind
Yep.
of dates me a little bit, but yeah, did that, and then kind of out of school was got very interested in anytime I heard anyone talk about real estate, I was drawn to that, and I'm not really sure why. I guess I've always been. This is sounds kind of weird, but as a little kid, I would ride my bike around town. This is probably a weird thought. I should be thinking about Spider-Man or G.I. Joe, but I was thinking, who owned these buildings and what they do and where they live and so I always thought it was for honestly, huge companies, which some of them are, they're on stock exchange and all that, or they're super rich folks and certainly there's a lot of that too. But I've played soccer my whole life, and this kid that I played soccer with, his family owned some of those buildings, and I remember going to their house, and this was had a pretty big impact on me because I watched them very carefully, and I was like, they're normal people, I was like, I'm better at soccer than their son, and like they didn't really have it's not like they're, they could jump higher. They were super, much smarter than everyone else or anything like that. And they owned skyscrapers in Fort Worth. And anyways, that kind of, I don't know, put a seed in my brain or whatever. But kind of fast forward a little bit. Yeah, started out, like a lot of people, single family, did some rentals and flips, and had some success. And then I was like, hey, how can I scale this? And so naturally, multifamily was kind of that next step. So that's kind of a little bit of background on me.
Amazing. Love it. I like the fact that you brought up, Dustin, that you were entrepreneur at heart from the get-go. And, it doesn't matter what business. I mean, in your case, you started with the candy business, which was perfectly age appropriate. And
Mhm.
you most likely you were surrounded by all of your target clients at that time. So
Yeah.
that was great that you started out with that, and obviously you are located in an amazing real estate market. So it was also very natural for you to transition into real estate investing in general. But share with our audience, how did you decide specifically on multifamily? Because that's your target asset class. So share with us a little bit.
Yeah. Yeah. So I'm a dip your toes in the water type of guy. I invested passively, like a lot of people did, because I wanted to, it's one thing for, someone to say it's going to work, and then it's another for you to start getting checks in the mail and all that. So once I started getting checks, I'm like, okay, this is real, and it wasn't just didn't just look good on a PowerPoint or PDF or whatever. And so I was like, okay, I want to do this. And so I started put my own deals together and all that. And on the first deal, I was a passive in. I was actually a KP. I signed on the loan. It was non-recourse loan, so made me feel better. But it was still at the time. I think it was like a $2 million loan or something like that. Prices were a lot lower then, but I was so nervous. I'd never, I'd bought a house and it was like 160,000, and versus $2 million loan. So that was kind of nerve wracking. But I bought my first deal. It was 109 doors in 2014, and raised a little over 1.5 million. For that, we had, probably about 35 investors, something like that. But for me, I wanted it to be pretty close to my house, and it was 10 or 15 minutes away. My dad actually grew up pretty close to there. And so I don't know, there was a lot of just kind of comfort, with the deal in general. And I was going through a coaching program, so I'm a huge believer in hiring coaches, or being if you're wanting to do something, go be around a bunch of other people that are wanting to do the same thing. And so anyways, but ended up in that deal. And then didn't go nuts or anything, but bought about two deals a year. And that's kind of how it started out in multifamily. But to your question about why multifamily, because once you got into it, and I started looking around, and there was other stuff, but I don't know, I think for me, and it helped that cap rates were going down, and it helped that rents were going. I mean, we were bumping up rents every 6 months, 75 bucks. And
To this
so
day, in this environment as well,
what was your question again? I'm sorry.
bumping rents to this day in this.
Oh, no, that was 2014 to
Got
2018 or 19. So
it. Yeah.
but yeah, I mean, I've looked at other types of asset classes. And I know a lot of, especially more recently, some multifamily folks have gotten into some other things and all that. But there was this, I don't know, I've just always been a big believer in, and I invest passively in some other stuff. So people that are experts in those things, I'll go put some money into. But we're very specific. We have a pretty small swim lane, and we just want to stay in the swim lane. It'd be similar to me being on a football team and saying, well, I'm going to play quarterback, and I'm going to play running back, and I'm going to play wide receiver, and I'm going to play on defense. And I mean, you can you can only be good really at one or maybe two things. And so we're just sticking to multifamily, and we have a pretty narrow focus there.
Dustin, I absolutely love that comparison. And you're probably, a great quarterback because you're sticking to your lane and always excelling, always trying to improve. So that's excellent that you're sticking with your focus. For us, I mean, the transition was natural. I started with multifamily like you many years ago.
Mhm.
But at some point, I decided that, oh, we've had a lot of apartment in our portfolio and our
Mhm.
investors' portfolio. So gradually, I switched to triple nets, which is
Mhm.
retail, office, industrial, and medical office space. That's what we concentrate on nowadays. But focusing is essential, regardless
Mhm.
what field you're in. But just it helps you to not only stick to your lane, but it also helps you improve what you're doing by constantly
Mhm.
working on the same thing and improving whether it's your underwriting or improving your property management or improving your bottom line in, for
Hmm.
you and your investors. So glad to hear that that's exactly what you and your team is doing. And you mentioned that you work closely to home in Houston area. Are you still focusing primarily on Houston as a submarket?
Yeah, so so I'm in Fort Worth, my business partner's in Houston. So yeah, we're just focused on those two markets. As you know, real estate is local, and so we want to be the masters of those two metros. So we don't want to what's really cool, kind of to the what you had mentioned was, so whenever deals that we own or even deals that we're bidding on, a lot of the times we've either underwritten the deal before, or if we haven't, we've probably underwritten one of the comps,
Sure.
or we own nearby. And so we have a lot of data, and it honestly gives us a competitive advantage.
Love it. That's amazing. Dustin, we kind of touched a little bit about the market shift when I asked you whether you were able to increase the rents like you
Mhm.
did in the past by $50 and whatnot. So, curious about your take on the current environment with the tariff increases and other things that are going on. What is your approach to the current environment, and what do you do differently, if anything, given the current lay of the land?
Yeah. So the the name of the game. So it's rents have been flat for the past probably 2 years now. So the order of what and I'm not just this is what we're doing, but this is pretty much what everybody's been doing. Is it's heads and beds, trying to make sure you maintain occupancy, and so people have either had to offer concessions, or they've sometimes had to lower rents, as or both. Or their occupancy goes down. So we've done a combination of both. So right now, we're seeing, it feels like we're kind of turning the corner a little bit. We've had two deals where we're pre-leased at 100%. In the past month or so, we're seeing occupancies kind of float up naturally. In general, we're starting to get, not nothing huge, but we're starting to get, a little bit of a rent bump on renewals, which is nice. It's been, we've just done sometimes zero, maybe like $20, but a lot of it's been zero for the past year or two. So we're seeing in traffic numbers have been increased, which is nice. I think that at least RealPage, so that's the data source that we follow, we have a subscription to and follow pretty closely. They have Houston at 2.8% rent growth this year. They have DFW at 1.8%. DFW has more supply to kind of work through this year. Houston has, I think the supply, they're bringing on 12,000 apartments this year. Last year is about 24,000. Next year is only 5,000. So it should be pretty exciting coming up.
Mhm. It's amazing that there is still some rent growth because many markets are suffering from either flat or negative rent growth for the
Hmm.
last several years, from I would say late 2022 and on, where it's been very, very challenging. So it's impressive that your market attracts the rent growth at this time and still offers strong fundamentals in general. But besides that rent growth, when you're underwriting deals now, are there specific criteria or the specific advantages that help you to find the right properties these days?
Yeah, I think the old adage of in single family was location, 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 and I think that very, very much applies to multifamily. And honestly, I learned the hard way. I there were some, there was one deal in particular, and we've always been. It helps. We have a lot more access to data now. But there was a deal I'd bought, and this is 10 years ago. So, there weren't all, at least I didn't really have access to, nearly as much data as we do now. We can go on LinkedIn and find pretty much everything you want on multifamily, regarding to data. So, anyways, but it was a area you drove by there and you're like, it looks fine. Looks like, middle class kind of, kind of neighborhood and all that. But just ended up being a lot tougher than we thought. We had a neighbor that just, honestly, they had lower occupancy. I think they kind of, weren't as strict on their criteria for who they let in and all that. And so there was a lot of crime, in the area, kind of because of that. And so that was, something that, kind of learned from, quite a bit. But yeah, so, in terms of what we're looking for now, so location, we just won't, we won't sacrifice on that. We could have a lot, honestly, a lot bigger portfolio. And so, but kind of looking back the past year or so, those deals that we had looked at and we're like, we just aren't comfortable with the location. Those deals are not in a great spot, right now because of that location. So yeah, I mean, location, if it has a current loan on it, that's attractive, obviously, but yeah, really just, really focused on location. We're, not really looking to, not every deal's going to end up being a grand slam. And, but, with that potential grand slam, nothing is risk free. There's no free lunch. And so typically there's risk, associated or higher elevated risk to, kind of justify that, grand slam. So we try to hit, doubles is kind of, what we're going for. If it ends up being, because of the market or whatever ends up being a lot better than that, that's great. But we want an attractive return, but we don't want to get out over our skis either.
Makes sense. Makes sense. Thanks for sharing that, Dustin. What about certain tax advantages or credits that might be available? Is that something that is available in your area? And if so, how are you able to utilize that?
Yeah, we've closed on four tax abatement deals. And so it's interesting. I didn't even know, you asked me 2 years ago about, I'm like, I don't, we've gotten a master class in this topic, which has been interesting. But yeah, it's been I think it'll end up being a really good thing, for our investors in general. But yeah, we've learned the ins and outs of it. So the way, just to kind of explain how it works. So there's various tax abatement. There's more than what I'm going to mention here. But so there's
Uh, Sorry for interrupting. Please start by explaining to the audience what is tax abatement, because some people may not even know what that is.
Yeah, yeah. So there's you may have seen in the news, there's PFC, there's HFC, and you've heard it's common to, oh, we're going to close the loophole and some of this other stuff. So what it is it's we applied for it, and we were approved on a tax abatement structure. So what that means is, so property taxes we're in Texas. Property taxes are big in Texas. So, we have multiple complexes where our taxes are $1 million. And so with the tax abatement, we if we agree not to raise our rents over a certain threshold for a portion of the complex, in our particular instance, half of the complex, there is a type of rent restriction for us for our assets. For 25% of the units, there's a 80% AMI threshold. AMI is area median income. So a lot of our residents already, are kind of in that bucket, so to speak.
Mhm.
There's the other 25% is at the 60% AMI level, and some of our residents already kind of fit that bucket. So there's not a huge rent disadvantage for us. The tax bills are our largest expense on our expenses, and so it far outweighs any rental loss that we may have. And so the benefit for us is I don't have my calculator in front of me, but if your NOI goes up by, let's just call it, 700,000, and and you're at a 5 or 5.5 cap, that's a lot of money, a lot of value that you've created. So it's very popular in Texas, and there's a few. I won't dive into the weeds too much, but there's Chapter 392. And then there's Chapter 394, and the one that you've seen in the news is Chapter 394. And so there's local, and then there's what's called traveling. And the traveling is the one that's been in the news a lot. So the traveling, what that means is, so we had to get approved by our local housing authority.
Mhm.
The traveling means that they went to, so let's say the apartment complex is in Fort Worth, Texas. So instead of getting approved by Fort Worth, Texas, they're getting approved by another county hundreds of miles away, and so that's the loophole. And so the Texas legislation is looking to correct that loophole. They're in session right now. So,
Got it. And so once they correct that loophole, will that tax abatement close and not be
uh,
applicable?
that there's a few of them in that particular one. Yeah, it sound from what we've heard thus far, that the traveling one will go away, and anybody that has, at least as of right now, if they have been approved for that. They have, I think, 2 years to get approved by the local housing authority, and kind of make sure that they're following all the rules of the local housing authority.
Got it. And Dustin, when you got this tax abatement, was it given for only the first year, or is it given for multiple years?
It's given basically for the life of the project. It's 99 years. So, yeah.
Amazing. And does it get transferred from one owner to another?
Yes, you can. Yeah. So you can sell. There's, so people would need to be approved and all that. So they don't want, they're not going to want someone that doesn't take care of their properties and stuff like that to be part of the program, because the city has, wants to do its best, for the residents and all that. But yeah, and there's a number of assets on the market right now that have gone through the program and been approved.
Got it. For someone new to the tax abatements, and for someone who is not in your markets, how would they find out whether the properties that they're looking at are qualified for tax abatements?
Yeah, that's a good question. I would say they need to have, so if it's a part of the country where their property taxes are very low, then it probably wouldn't really, help them, honestly. But if they do have a hefty tax bill similar to Texas, I'm not we only invest in Texas, so I don't know about other states, but
New Jersey
it
has high taxes as well, so I can.
Oh, okay. Yeah, it may be, a possibility. And yeah, I mean, I don't have necessarily a go-to resource, but I'm happy to try and make connections of people that might know. So,
Got it.
Mhm.
Amazing. So, Dustin, what you're saying, it's not easily available on the internet. You would have to do some digging to find out whether there is such program available in general.
Yeah, yeah, and the just to so like we it's a pretty tricky process to be honest. And there's it's a lot. It's very feels like it's very much a relationship type of scenario and all that. So yeah, I think it would I think they could do it on their own. That's not again like we started out talking about. We stay in our swim lane, so we hired some professionals that's what they do, and they've done many times successfully. So yeah, but happy to try and help any way we can.
That's excellent. I like how you brought up hiring other professionals to
Hmm.
help you with what they are doing best, because that's not necessarily yours or your partner expertise.
Hmm.
Many people don't realize that and try to do everything themselves. And if they don't have expertise in a particular area, they may be able to do it, but they may not do it just as good as others. And that's why hiring professionals, whether it's advisors, coaches, mentors, or guides, is always helpful. And that's one of the things that I actually bring up, Dustin, with my audience when people are looking to get into investing and just invest passively. I share my journey, and I've
Hmm.
invested in a lot of programs, bought a lot of books, went to a lot of conferences and webinars. But I share with people that if you want to take a shortcut, that your best bet is working with a coach, and that's what
Hmm.
my coaching is currently offering people, to take the shortcut and learn
Hmm.
how to become more sophisticated in your passive real estate investing. But I'm sure you can relate to that subject, and that's what one of my mentors, Warren Buffett, is teaching. You have to invest in your greatest asset, which is yourself,
Hmm.
if you want to make anything happen for you in your life. So investing in yourself, investing in your education,
Hmm.
or investing in things that will expedite your progress, or hiring professionals like you did, always helps to get the best results possible. And that sounds like the case with you, and how you guys got the tax abatements for your properties.
Yeah, yeah, absolutely. Yeah, 100%. Yeah, I agree with everything you were saying. I mean, look, we've anything that we've kind of or a lot of people do. I mean, I've had a running coach, I've had a workout coach, a nutrition coach. I
Sure.
mean, I don't know. Yeah, huge believer because it just cuts down on your you can either kind of fiddle through and I'm basically, they've spent a lot of time on that. They're the experts in that, and
Yep.
they've already gotten the results that I want. So why not take a shortcut?
Makes
So
sense. Makes
yeah.
sense. Dustin, are you changing your strategy now that we had the change in administration, and we are currently going through a lot of changes with tariff war and other things, and still have a lot of questions on the table, if you will, that may or may not impact real estate as a whole. So with that in mind, are you and your team adjusting your strategy? And if so, what are you guys doing differently, if anything, to continue on your journey to buy more assets?
Yeah, I don't think there's any huge adjustments. We were just on the phone with someone that we work with to import things, from overseas. It's interesting. So they told us that so they did import some things from China. They import some things from other countries that are not being affected really by the tariffs. But they told us that a lot of those factories that are being affected in China, they're actually, moving across the border and setting up shop in a different country, so they're not affected by the tariffs. So, we don't know the effects of pricing by them, basically moving the factory, but they thought it was going to be, pretty minimal effects from what they were being told. So we'll see TBD. I think overall it might be, just in terms of, I don't know, who knows? We'll see what all this, if this ends up being more posturing or if it's, ends up, I don't know what it'll look like. But I think as far as, if you're a developer, this could really impact you, which for us who, we buy existing product, could be good because less supply, down the line, which means, probably higher rent. So I think it could be, for operators or people that buy existing could be, really good news for the, even more, more good news for the next few years.
For sure, for sure. Thank you for sharing your point of view. Dustin, it's been a great interview. At the end, we typically ask our interviewees two personal questions. One being, how can our audience reach out to you? Can they find you on social media, or are there any other ways they can connect with you?
Yeah, absolutely. I'm on LinkedIn. Trying to get better about posting more like you, but just Dustin Miles. I think my middle initials on there, W. So not too many people with my name. I'm on Instagram. On Instagram, you're going to see either pictures of my son working out or apartments. That's what you're going to see. Or our website is momentummultifamily.com.
Nice. How did you come up with the name Momentum?
It was actually my business partner. I think he came up with it, and he just liked. So we started working together, and we were. It was a meetup, is how him and I started working together, and he came up with the, he likes the M in multifamily and the M in momentum, the alliteration there, and so just wanted, hey, what would be, just something that kind of sticks out and something that, everyone kind of wants, and everyone, it's funny how many conversations that we'll have with investors, so we'll have with brokers, and they're like, yeah, we're seeing this sort of momentum, or we want momentum or whatever. And so it's just kind of fun.
Yeah, well, funny that you mentioned that, because when you said momentum multifamily, the first thing that popped up in my mind is your original business idea, and I'm thinking M&M.
Oh, yeah, that's true. Yeah. That's funny. Yep.
Yeah, candles are always handy
Yeah.
and tasty. And on that note, one last personal question is, how do you like to give back?
Uh, yeah, good question. I went to a charity event this weekend, so I guess I did, time and money, but I think in general, I do through a few organizations, locally. I do, I like to try and make, connections for people, especially I think younger folks, kind of starting out. Like I didn't have a whole lot of, I guess, other than the people kid I played soccer with, his family, but I didn't really have, a whole lot of people to, I guess, kind of reach out to, and hey, how do I get from here to here? What do I need to do? And so I'm always happy to help. I've talked with some folks that are in college and looking to get into, commercial real estate and things like that. So always happy to help any way I can. So yeah.
I love it. Yeah, helping next generation to jump start their investing career is absolutely
Yeah,
amazing.
absolutely.
Thank you for doing that, Dustin. Dustin, appreciate you coming on board. Thank you for a fantastic interview. For listeners, if you want to find Dustin, then he's definitely active on LinkedIn. So follow him, connect with him, and reach out if you have any questions. Until next time, goodbye, everyone.
Thank you.